And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts, presented by RIA Advisors.
Welcome to The Real Investment Show. I am Danny Ratliff, filling in for Lance Roberts today. So thanks for hanging out this morning. Hopefully everybody's off to a great start. So, interesting week in markets. Markets have been relatively stagnant, a little bit up, a little bit down. Markets have been a little bit overbought for quite some time. And as we saw this great run up here in November, we've kind of been expecting to see a little bit of a pullback here as we go into capital gain distributions here in the next week or so. And so we're prepping portfolios over the last couple of weeks. I think this is something that, we're watching for daily. Lots of different news. Seems like markets kind of teeter-tottering back and forth with headlines. Currently, the big news is stimulus, and we're still waiting on that package. Yesterday, markets were down just a bit. Today, futures, Dow implied opens just up a tad bit. NASDAQ down just a little. And so we're seeing a little bit of mixed results here for the moment. But that could change. I'm not real hopeful. We had a $900 billion package that these guys were trying to get past, and we just can't seem to get through that final mile. We've been back and forth as we've seen the House and the Senate kind of jockeying for what they all deem important. One thing we do know is this is something that is very needed as we get in, past the holidays. A lot of things are set to expire here from the CARES Act. We're going to be talking today, later in the show, about what you can do, what you need to be looking to take advantage of now, as some of these things may expire. And how do you protect yourself moving into 2021 from a planning perspective, especially if this virus lingers? I think we're all hoping now that vaccines are here, they're going to work, they're going to be distributed, and people will actually take them. There's some talk out there that we will actually see, payments for, or legislation potentially pushed out there that they're going to give stimulus for people who take vaccines. I don't know how viable that'll be. We'll get into some conversations around that. But, we're seeing a lot of things occur at the moment. Interest rates have jumped up a little bit. Yesterday, NASDAQ was down about 2%, 1.94% to be exact. And, interesting. We have lots of conversations with people who, clients, prospects, just people who have questions in general. And we love to answer any questions you have. You can go to realinvestmentadvice.com, ask a question there. We get back to you pretty quickly. But so yesterday I was visiting with somebody and they said, well, what do you do on a day like today? I said, well, what do you mean on a day like today? Because as many people know, if you follow the show, we're not your typical money manager in the sense that we don't just buy and hold, set it and forget it and say, just hang tight. Everything will be okay. We're a little bit more nimble, and we look at, fundamentals, technicals, and we're looking at different strategies and ways to, one, preserve capital, but two, still participate on the upside. And so on a day where we have a 1.94%, down day in the NASDAQ, the question came is, what do we do on a day like this? I said, well, we do nothing. And, these days are normal. And we've seen a lot more volatility, especially this year, earlier in the year. Even in September, October, we saw a bit of weakness in the markets. And so the idea here, though, is to make sure that you're preserving assets by using a discipline. And so one thing I want to reiterate is, I know lots of people have similar types of questions on what do you do on a small down day or even a larger down day. As long as technical trends aren't busted, and things are still moving in the, quote unquote, right direction from a bull market perspective, we're generally not going to do a whole lot. Now, when markets are very expensive, like they have been here recently, back to new highs, we start taking some profits a little bit at a time. You want to sell when things are on or up, not when they're down. And, inevitably you may have to do a little bit of both by trimming some losers. You let some winners run, but you also you trim the garden, take some gains all along the way. And so I think this is extremely important when we are at peaks in times like we are right now. Now, is it plausible that we see a Santa Claus rally or we rally through the end of the year? I think if we get a stimulus package, I think anything is possible. If we continue to get good news from a vaccine perspective, I think that's going to be extremely positive for markets. And, we may see this thing roar into 2021. Now, interesting dynamic. We talk about lots of different segments of the economy, how things are doing, and we're seeing much different recoveries, much different demographics and classes. And unfortunately, I think we have there's a lot to be done to see this thing move forward and to pull people out of this big valley that they've fallen in. And, we talk about the tale of two recoveries. We talk about the disconnect between Wall Street and Main Street, but there's also been a large disconnect between Wall Street and Wall Street for the majority of this year, where we've seen growth is really taken off the value oriented, who's a little bit more susceptible to economic changes. Obviously, the huge slowdown that we saw. It has been a very interesting year where the growth, the places like Zoom, Microsoft, Apple, Netflix, all of these things that have been able to benefit from this pandemic, these guys have soared up astronomically. We've got Tesla. I mean, Tesla, if you look at the numbers on this, I know Lance has talked about this quite a bit. It is amazing. I mean, the way as big as Tesla's got from a market cap perspective, I mean, it indicates that this is going to be one of the largest or the only manufacturer of cars in the world. And so, I think when we start to see this great euphoric feeling that investors feel, and they feel that things they can't go wrong, I think that's when we need to be cautious. And we need to watch what we're doing, how we're doing it. And that's when you need to set those disciplines in place. And also be prepared not to make those rash, knee-jerk reactions where we may say, whoa, market's down a little bit. We need to get out right now. And so make sure you're trading with some discipline here. This is an interesting year, a challenging year for markets. Nonetheless, we've seen, who would have thought if we'd have started at the beginning of this year or even this time last year, and I would have said, hey, guys, we're going to be in the midst of the worst pandemic we've seen. The reaction to it is going to be devastating economically. We're going to lose close to a third of the economy. We're going to have 40 or 50 million people out of the workforce or fall out altogether. A 35% dip in the S&P, but don't worry, we'll be up at the end of the year. Every one of you guys would have said, man, you are nuts. What are you talking about, Danny? This makes no sense whatsoever. And so this is the other aspect of investing that I think is extremely difficult. And many of you can relate. It is so difficult rationalizing an irrational market. And in a lot of ways, the market's looking out, way to the future, saying things are going to get better. We're going to continue to improve. And I do believe that's going to be the case. But we haven't solved any of the economic issues that we had prior to this. We had concerns prior to going into the pandemic that prices were high, that we were seeing an earnings recession on many, many companies, that we were seeing a lot of debt, and debts and deficits have grown substantially. We thought we were going to see higher taxes. Those may be here sooner than we think. I'm hoping and praying that we get to 2025 and it gives us a little bit more leeway. I suspect it'll likely be 2022 before we see any types of changes, but these are all things we need to start accounting for and planning for, which we're going to start talking about as we head into the year end. Some tax moves that you can do, working on getting some CPAs to come join us so we can visit, talk about what you need to do to protect yourself right now. So it's not just about investing, it's about planning, it's about those smart moves you can make along the way. We're going to talk about more of that. We've got a lot to get to today. Got a really good inflation story. Came across an old relic this week while restoring some furniture. So I want to share that with you guys and some of the things that we are seeing from inflation. We'd love to hear from you too. So realinvestmentadvice.com. If you have any anecdotes or you've seen some things, don't hesitate to share that with us. We love to hear your stories. And if you have questions, don't hesitate to ask. We'll be right back. You're listening to Real Investment Show. Thanks for joining.
Yo-yos, that's the way you do it. You play the guitar on the MTV. That ain't working, that's the way you do it. Money for nothing and chicks for free. Not ain't working, that's the
You're listening to The Real Investment Show.
Hi, this is Danny Ratliff, Senior Financial Advisor, wishing you and your family the merriest Christmas from all of us at RIA Advisors.
This is Nick Lane, Analyst for RIA Advisors.
This is John, Senior Relationship Manager, wishing you and your family a very safe and Merry Christmas.
This is John Levy, Senior Advisor for RIA Advisors Austin and President of Advanced Wealth Strategies Group in Round Rock, Texas. I'd like to wish you all a very merry and blessed Christmas and holiday season. God bless you.
The Real Investment Show.
the marketplace. Wiley is the singer in the back.
Welcome back to the Real Investment Show. I'm Danny Ratliff, filling in for Lance Roberts today. So we talk a lot about inflation and how things change over time, and came across something really pretty neat. I had somebody redoing or restoring an old desk that was my grandfather's from back, obviously, earlier than the 70s. And it's interesting. I've had this desk for a long time, and it has lots of neat compartments, Brent, that I've never seen.
Yeah.
And so had somebody helping restore this, and he pulls out an old J.C. Penney company installation contract. Now, it's pretty neat. So if you're watching on Facebook or YouTube, any of our outlets, you can see here. I mean, this is a relic. This is pretty cool. First of all, I learned something new. I did not know that J.C. Penney's would actually go in and do remodeling.
Back in the day.
So back in the day.
Back in the last century.
Yeah. This comes from February 18th, 1974.
Wow.
So, I mean, they don't even make paper like this anymore, Brent.
Were you even around?
I was not. I don't think I was even a twinkle in my parents' eye at the time. So, but the things that they did, I thought were pretty fascinating. So, they're going to furnish all of the appliances for the kitchen. Mm-hmm. So, new stove, refrigerator.
From JCPenney, of course.
Correct. And then they're going to redo the bar. They're going to take out the floor. They're going to redo the floor in the dining room, the kitchen, and then they're going to put in carpet in the other rooms.
How thick was the shag?
2
inches?
It didn't tell me how thick the shag was here, and I don't recall shag, but anything's possible, right? Back then, I do remember they had this funky green leather couch.
Oh yeah,
which would be really cool right now. Mm-hmm. I'm sure if we, anybody could find that in a dump yard somewhere, I bet's where it is.
It all comes back around.
It does. So they're going to clean up Holloway. They're going to do all of this work, put carpet in, basically new floors in the whole house. And what do you think that was, Brent?
Oh, I don't know. 1970s remodeling, maybe a couple of grand?
$230.13.
Really?
So I know a lot of you guys out there, I mean, if you look at the Home Depots, the Lowe's, all these companies that have done really well, I know you guys are out there doing remodels. In fact, I'm talking to a lot of you, especially if you're stuck in home. Everybody has that honey-do list that they've been checking off, mm-hmm. and, that seems to be a perpetual list that never goes away. Trust me, I understand. But it's interesting to think about the cost of this.
Wow, $230.
I mean, when can you start?
Yeah.
It's pretty amazing to think about that. And, we talk about how the cost of different things, they go up over time. Mm-hmm. And I know for a fact, I don't even think you could do a one room, much less, your whole house
well, you
for
can't
$230.
Can't even replace the microwave for that.
No, you can't. And that was appliances. And did you have microwaves back then, Brent?
No, we didn't.
No. Okay.
Maybe if you were lucky, you had a toaster oven.
Well, back then, I mean, you just put it out on the driveway and, campfires, things like that, right? Is that how that went?
Yeah.
But, we talk about inflation frequently, and I think this is one of those deals where, this is a good example. I love the books. If you ever go to Cracker Barrel, the restaurant, they have these old books, and for each and every year, it tells you how much a stamp was, a gallon of milk, gas. I mean, just about anything you can think of that, is probably a staple in most people's household and necessities. And I always love seeing those throughout the years, and it gives a prime example. But it's kind of neat to have one that, hit home a little bit, had my grandmother's signature on it. Signing Mrs. Ratliff. Yeah. I was like, no, actually Mrs. S.C. Ratliff, which was my grandfather's initials. It's kind of neat.
So I'm curious, you're refurbishing your grandfather's desk.
Correct.
What's that costing?
It's not as bad as you would think. So this is going to cost several $100.
Yeah.
Yeah. So I had quotes for quite a bit more. We found a really good guy who does great work, and he's like, yeah, I know everybody's. It's kind of a hobby. He's retired. He's like, everybody's out there to get you. So he's like, I typically give everybody a good deal. So he lives in the neighborhood. So we got lucky.
He does it for the love of the craft.
Yeah. Oh, and he's good. He's good. So it's pretty neat. This was actually my grandfather worked for Transco years ago, and when he retired, they gave him his desk.
Really?
Yeah, so it's a big executive desk. I mean, it's huge.
Wow.
It's going to swallow the room. And I've had it for years. And at one point we moved. My uncle took it, stored it for me for a while. Then he moved, so I got it back. And it's been sitting in the garage for way too long. And so I said, all right, that's it. We're going to get this thing done. But so, in fact, Brent, the number one thing I love about it on the inside, it still has the Transco kind of equipment number. You know, they have a little tin tag.
The inventory number.
Yeah, inventory number. They nailed into it. So it's pretty cool.
That's cool.
Yeah, I'm excited to see it when it's done.
Can't wait to see it.
So, well, you know, talking about inflation and getting to that, I think that right now portfolios are changing, or at least they should be. We should start thinking about what are we going to do for fixed income? And this is a topic of discussion and heartburn and things that everybody's talking about because we need to make changes, and we're not going to be able to rely on fixed income like we previously have. And so when we talk about, you know, building portfolios, you know, modern portfolio for the most part, I believe, has probably been thrown out the window. You know, we don't have the diversification that it provided way back in the 70s. Markets are so intertwined. You know, it used to be if somebody sneezed in Iran, you never hear about it. Now, you know, it's within minutes, you know something, if not seconds. You know, that's how quickly information flows across the globe. And so, you know, among stocks, that's a whole nother story. But fixed income, we could pretty much consistently rely on for 3, 4, 5% without taking a ton of risk. Now we can't even rely on that in very risky areas on a consistent basis, not unless we want something that's going to typically trade like a stock. So, you know, looking at inflation, how you're going to keep up with it, even though you may see rates at, 10 years at 0.93, you may see rates at 1%, 2%. Maybe you get that upside. If rates go up, which is what everybody's saying now, maybe doubtful with Janet Yellen as the Treasury Secretary now, working with Jerome Powell, as Lance says, the fox in the hen house here. We're going to see easy money. We're likely going to see other issues here. And so what I would really like to think about is that where do you go to find yield? And is it just in stocks or is it just in bonds? Because I don't think it can be one or the other. I think it's going to have to be a combination. You may have to get more creative in where you go. And I know that's something that we're looking at. We're making changes on a regular basis as we've continue to see the current environment. It used to be that we could go buy individual bonds pretty easily, buy them in bulk, buy good quality, not have to pay an arm and a leg. That's just not the case these days. And so, I want you to begin to think and start questioning your advisor as far as what is going to be next for fixed income. Because if rates do go up, which we have a handful of ways that they could. Now, I think inevitably they'll likely come back down because it's going to put too much pressure and strain on the economy because of all the debt that's out there. But there's going to be a moment. We're going to get some reflation. We've seen that in stocks. All year long, it's been the growth sentiment. Everybody's been expecting value to come back. Well, guess what? November, as we had Pfizer, Moderna, AstraZeneca, as we had all these vaccines beginning to come out, I suspect we're going to see more and more. Next thing you know, I think that we're going to see that reflation trade just a bit. And we saw that with the materials, with energy, with financials, all of these things that we're hoping on, the economy reopening, rates popping a bit. And so it bodes the question, where do you go? And so there's going to be an issue where I think it's not going to just be fixed income. It's going to be an income sleeve, and it's going to have to be something that you're going to have to manage and watch a little bit differently, because as things reopen, as there's potentially more stimulus, we could see rates creep. And I think that as we do, you're not going to be able to just sit in that old school bond fund anymore and just set it and forget it and rely on this. We've been in a 30-year bull market for bonds. We've had rates decreasing. We thought we've been between a rock and a hard place for a long time. And we have. But now we really are. I mean, investors have really been, squeezed to try to get yield. It used to be, we talk a lot about the 4% rule of thumb as far as what distributions can be. That's just not the case anymore. It used to be that you could go out and your risk-free rate of return was easily 3, 4, 5%. We can't do that. It's just not there. And so you need to begin adapting. This is the end of the year. we've talked about this last week. I think it's time to start, really putting the pen to pad, understanding your budget, where you're spending money. Now, inherently, most are probably spending less, unless there's an Amazon package at your door every day. And I think a lot of people can relate to that right now. I mean, I look out the window and I see them going down the street, and I start to wonder how efficient they are, Brent, because I see one guy come, another guy come. I'm thinking, man, you guys must be coming from all different directions here. And I think that everybody can probably look out their window these days and probably see something very similar, or you're experiencing that at your door. But, it is time to rethink the budget, rethink the whole big picture, because this is going to be something that is not going away quickly. I know there's light at the end of the tunnel with this vaccine, but the impact that this has had on the economy, on companies, is going to linger for quite some time. We may not get out of this for years. And a lot, if you go back to 2008, think about how long people were unemployed. Think about how long it took for people just to get back to even. We're in another scenario like that. The interesting part of this is that there's a lot of things the CARES Act has done. There's a lot of stimulus that's been out there where we haven't felt the full strain on the household. Now, it depends. We talked about last time a little bit how there's two different recoveries. I think we're going to see some more of that. But we're going to get back. We're going to talk about a little bit of personal finance 101. What are teens calling for? And a little bit more inflation stories. Some things I want you to see. Just some stories we're hearing from clients and just people out there right now that they're experiencing from a cost perspective as they're buying things. We're beginning to see a little bit of, not going to say hidden fees, but there's maybe some hidden fees. So you're listening to Real Investment Show. Go log into the website today, realinvestmentadvice.com. We're going to have lots of new information, changes daily. If you have a question, go ask a question there. We'll be right back after this quick break.
Listen anyplace, anytime at realinvestmentadvice.com.
Ho, ho, ho. Merry Christmas. No, it's not Santa. It's Rich Rosso, Director of Financial Planning for RIA Advisors.
Hi, this is Samantha, your Senior Client Service Administrator.
This is Chris LaRochelle, Senior Advisor with RIA Advisors in Round Rock.
Hello, season's greetings. This is Diana Williams, Client Service Administrator at RIA Advisors.
Wishing you a very Merry Christmas and a Happy New Year.
The Real Investment Show.
Welcome back to the Real Investment Show. I'm Danny Ratliff, filling in for Lance Roberts this Thursday. Hope everybody's off to a great start. I know it's early in the morning. Lots of you guys out there looking for your coffee, maybe getting a refill. So I've got good news for you. Panera is going to offer 3 months of free unlimited coffee for new subscribers. So they actually have a coffee subscription. Talk about innovation within companies, Brent.
How does that work?
Well, between December 10th and December 31st, you can sign up for their coffee subscription. $8.99 a month. You can go get unlimited refills. You can get every 2 hours a coffee or a drink. But if you sign up within this 21-day window, they're going to give you free 3 months.
Wow.
I mean, that could be a lot of money.
That could be dangerous.
It could be dangerous. Now,
because
have to go
when you go into Panera Bread and you get your free coffee, you're not going to be able to avoid the pastry case to the left of the register.
Right.
Just saying.
I used to go to Panera a lot years ago. I mean, probably 15, 20 years ago. There's one right by my office. And now I tried to a while back, and I was like, man, it's going to cost me $15 to get out of here. It's crazy.
It's as bad as the Starbucks.
It is. But, pretty innovative here, I think. Obviously giving a little bit of a perk. Not just the coffee. No pun intended. That's right.
Very good.
To go ahead and sign up. This would be interesting. I'd love to see, how people actually use it. For me, just going in or sitting in a drive-thru would be too big of a hassle, I think, to do. But, hey, if one's close by or, you can make it work, Not a bad deal.
Well, it's a brilliant business strategy. It's like what the computer companies did when they were selling printers, and they would sell you a printer for $100, that would do all this whiz bang stuff. But when you had to replace the ink,
oh yeah, it's another $100.
Oh man, yeah, it's nuts.
That's the thing. You got to do calculations on how often do you print, what's it going to cost you per sheet.
Makes you think about it.
Yeah. I didn't go with the Jet last printer I bought just because I thought, it'll get me here. But my printer is used more these days for paper airplanes with the kids than I think the printer paper, at least in printing. Everything's electronic these days. It's so nice.
And that 20-pound bond paper, that flies pretty good.
Oh man, it's not 20-pound, I don't think, but it's not bad. They certainly make the most of it. I said, hey man, how many paper airplanes do we need? I'm finding them all over the house. So, kind of continue along the coffee theme. We did this last weekend. We had a Candid Coffee. We talked about long-term care. This is a very hot topic. Lots of concerns over, and really the financial elephant in the room, because this is something that can make or break a plan. And if you're married, you especially women, unfortunately, you generally take care of us men. You need to start thinking about what that care looks like for you and how do you not become a burden on your family. So we talk, it's a quick hour conversation. You can go to our YouTube channel or go to realinvestmentadvice.com. Click on YouTube. Some of you may be there now listening to the show. We appreciate everybody tuning in, but you can catch that replay. And so, just sharing lots of general information on it. There's no product sales. It is strictly just trying to inform and educate. And if you have questions about it, don't hesitate to reach out. We love to answer those types of questions. But, Candid Coffee, long-term care, you can look for it right on the YouTube channel or go to realinvestmentadvice.com, hit YouTube. So we're going to do another one in January. I believe it's January 16th to be exact. And this one's going to be a personal finance 101 boot camp. So we're going to be talking about all the things that are important as far as starting off a year. What can you be doing to get back to the basics? And the best part about this is I've got our partner, Richard Rosso, is going to dress as Richard Simmons. It's going to be fantastic. And so, Richard, if you don't have your outfit ready, don't worry, buddy. I got one for you.
Rosso in short striped shorts.
Yeah, he wants a headband that says, let's get fiscal.
Fiscal,
yeah, instead of physical.
Yes.
Yeah,
yes.
I like it.
Yeah.
Creative. He's always good for a good laugh. So I'm sure we'll talk a little more about this tomorrow. But, last segment, we were talking about inflation. And so some of the things that we're seeing, and I'm hearing lots of news of people when they go out to eat, they're seeing additional cost. We've talked about the COVID cost or tax, so to speak, for the additional cleaning and how that's likely not going to go away. I went to a restaurant a while back and saw the same thing. And in fact, the waiter came and said, hey, there's going to be an extra $5 charge on your bill at the end of the day. I want you to be aware. Here's why. I said, wow, I felt a lot better about them telling me at the beginning instead of the end, which is what a lot of people find. But I did have somebody who went to go out to eat a couple weeks back, and they had an additional charge on their bill when they went to go check out. This is a breakfast place, pretty popular, lots of people there. And they said, hey, what's this extra $1 on each of our meals and 50 cents on the coffee? And nobody could tell them. Not anybody. And this also wasn't first thing in the morning, and the restaurant was full. So the reason I'm sharing this with you guys is that they're sneaking stuff in on us all the time. You need to begin checking your receipts, check your bills before you sign them. And I understand a lot of people say, it's just $1, it's just 50 cents. Well, guess what? If every time you do something that occurs, this is going to add up pretty quick, and you're going to begin to see that it's going to be a little creep on your wallet. It'll start to become a little bit slimmer.
Have you found that you're tipping more or tipping better, particularly if you get great service from the waiter or waitress?
I try to.
Because of the COVID thing?
Yeah, I try to because I know the struggles that these guys have been through. I mean, we don't eat out that often, but when we do, especially if you get really good service, you want to take care of these people because especially holiday season, it's just one of those. It's that time of year, number one. But I even found before this, I try to tip a little bit better just because, people are hurting. I mean, you got to think about these restaurants. If you're if you're running at max capacity now, it's 50% of what it used to be, or a quarter of what it used to be.
You look in that dining room, and half the tables they can't use.
That's right.
That's an impact.
It's a huge impact. And so, I think right now holiday tipping maybe go a little bit above and beyond if you can. I know not everybody can, and look, you need to manage the household and take care of yourself. But also, if you can't, maybe you need to start thinking about where you go out to eat and what you do. Not condemning anybody here, but you need to start thinking about those decisions and what the overall lasting impact is. And that's the hard decision that nobody wants to make. I think that usually we can see in big recessions, we love listening to people as we're out in different places and kind of what they're talking about. You can overhear stock picks. You can hear all kinds of things that, are relative to life in general and investing and kind of what we're looking at. And it's interesting, you look back in certain times, you'd see restaurants like in 2008, restaurants were empty in most of the country. Here in Texas, we weren't hit as hard because we didn't have some of those areas that were nearly as bad as some other parts of the country. And so you could go out and you still see restaurants that were fairly busy. Things had slowed down quite a bit, but they were still pretty busy all in all. But you can also see, there's old evidence saying, hey, you can go look and see what, are people ordering desserts? Are they sharing meals? I mean, these are things that I think that a lot of people look for. Does everybody order a Coke or, a soft drink? Or is everybody ordering water? I mean, there's little things, and a lot of people say, wow, you're really going really far. But I think all of these can provide a little bit of evidence as far as what people are feeling and how they're doing overall. Now, some people you may never be able to tell because they're going to live, like it's their last day every day. And that's okay. But you need to manage your household in the sense that you know where you're going, and hopefully you have that longevity for the plan. And, the big thing here is I think that there's that balance. I mean, we talk about a balance on a regular basis. And, from an advisor perspective, I think, we're probably more willing to tell people to spend money than not, because you do have to have that balance in life. Because if not, if you're all in one way, you're typically, it's just so difficult to do anything else. If you're it's just like the diet. If you go full bore into some big diet, why do most diets fail? Because it's not consistent. And that's the key. You need to have some consistency. That's why everybody encourages a cheat day. And so I think the same thing can be done with finances. And, when you're thinking about that and looking at that, something to be considerate of. But so inflation is creeping up in those extra spots. We're hearing more and more about that. We have a friend who goes and gets a Starbucks every day. And they say, look, my coffee used to be $2.35. I noticed, because I get my receipts, that now it's over $3 in the last, some odd, year or months. And so, but it's happened very little, 25 cents, 35 cents, 5 cents.
The strangest thing we've seen.
Okay.
Last week, took my wife to have an MRI, and we checked in and we did all the sign up stuff. And when we paid, there was a place for a tip on the bill at the imaging place. And I said, are you kidding me? You want me to tip you?
What'd they say?
Oh, I mean, that was the internal voice.
Okay. I think I would have.
Inside voice, outside voice.
Yeah. I don't know if I would have been able to use an inside voice on that one. Like, what? But no, I'm seeing that at places that you typically wouldn't. I mean, if you go to your tailors or you go somewhere, and granted, I know a lot of these places have slowed down, and so they're probably looking for a little bit additional way. And I know it's also the software that allows it. But usually in a business like that, you would typically say, we're not going to allow this type of tip. Some places I've gone to like that, Brent, though, I'll ask them like, hey, I see a tip line here. Oh, yeah. Don't worry about that. Here's what it is.
Yeah.
And so, okay. But interesting to see that I think we're seeing those prices begin to creep a little bit. And I believe that they're probably here to stay. Once they raise something or big corporations make big changes, they usually don't revert them very quickly, especially if you're still buying their product. So we're going to talk about that personal finance 101, what people are calling for at the moment. We're going to talk about the CARES Act, what you need to know to make sure that you're taking advantage of everything these last couple weeks of the year before that's set to expire, and then what we could hopefully see out of a stimulus bill. So you're listening to Real Investment Show. We'll be right back.
Gina works a diner all day. Working for her man, she brings home her pay for love. For
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
This is Lance Roberts, your host, wishing you all of the best in the new year from all of us at RIA Advisors.
This is Nikki Brock Maresca with the RIA Advisors HR Department, wishing you and your family a very Merry Christmas.
Hi, this is Craig Severin, Senior Financial Planner, wishing you a Merry Christmas and a Happy New Year.
This is Brent Clanton, Executive Producer, wishing you all the best in the new year.
Hi, this is Connie Mack, CEO, wishing you and your family a Merry Christmas from all of us at RIA Advisors.
You're listening to The Real Investment Show.
Welcome back to The Real Investment Show. I am Danny Ratliff here for our final segment this Thursday morning. Hope you guys are off to a good start. Have your coffee in your hand. It's been an interesting week in markets. Looking at futures now, still a little bit mixed. Hopefully we'll see a little bit of opportunity here in the coming weeks, and I think we will. You know, everybody's been expecting this Santa Claus rally, and you know, I think stimulus gets done. I know everybody's not real hopeful, but I can't imagine them playing this out too long, especially with some of the repercussions in the CARES Act that we may see because of it. You know, a lot still going on, lots of news, lots of information out there. I think we need to be very mindful. We need to be cautious, but we don't need to be emotional. And I think that's going to be difficult. You know, talking about lots of different trends and things we looked. Last segment we talked a little bit about, you know, what we can see and take from when we're out in public and, you know, things people say. Google does something, and it does the top trending searches of 2020. And I always think these are pretty interesting. And some of them are fairly indicative of this year. So for news, the number one search result was election results, coronavirus, and then stimulus check. Now, I would have figured coronavirus would have been number one, but hey, that doesn't surprise me too much. Now, people, Joe Biden was number one, Kim Jong-un was number two, and Kamala Harris was number three. TV shows, Tiger King. I mean, it's almost like we forgot about Tiger King because everybody's now talking about number two, Cobra Kai, and then Ozark. But I mean, if Tiger King doesn't sum up 2020, I don't know what does.
Ozark showed up in the search?
Ozark showed up in the search.
Really?
Yeah. I was kind of surprised myself.
That's like Breaking Bad with trees.
There you go. That's right. That's right. And a little bit more sophisticated, right?
Mm-hmm.
So, number one thing for how to make was hand sanitizer, a face mask, and then, as we've talked about today, whipped coffee.
Whipped coffee?
Whipped coffee. Y'all get fancy out there. See, this is what happens when people stay home too much.
Yeah.
They say, you know what? I need to shake this thing up a little bit.
What would happen if...
Yeah. How do we do this? So now this was interesting. The number one why question was, why were chainsaws invented? I mean, you guys have got way too much time on your hand if you're thinking about that. That was the number one Google search for why. I mean, come on. Is there a coin shortage? Which we've had discussions about that on the show. Lance and Mike have gone in depth on these things. So pretty interesting. Where is my stimulus money is number one. Number two, my refunds. And number three, Kansas City. Now, which Kansas City are you talking about?
Well, there's that.
Yeah. Now that I could get. But Kansas City.
Did you see the travel warning map?
No.
Places that the health department or whatever is telling you not to go to. And one of them said, people in Ohio shouldn't travel to Ohio.
People in Ohio should not travel to Ohio.
Mm-hmm.
Perfect sense.
Can't make this up.
Perfect sense. So, where do you go?
Not Ohio.
Perfect.
Come to Texas.
So, last one, how to cut men's hair at home.
Yeah. Number one guard. All over.
There you go. I don't know what number two means. Plop hair. I'm assuming that's something for women.
Plop hair?
Plop hair. Plop. And then
I have no idea.
color your hair at home is number 3.
Yeah.
I could probably use a little bit of that to get a little grayer. Getting a little balder. This year's been rough.
Don't use the stuff that Giuliani used.
I haven't even seen him, but I'll take your word for it.
He did the press conference a couple of weeks ago, and his hair dye started to run.
Oh, geez.
Because he was sweating.
Awesome.
It was awful.
So his must be like an application he puts on each time he goes out in public.
Apparently.
See, my hair is getting easy. I started cutting my own hair. It's like $20, $25 to go get a haircut.
Mm-hmm.
So I've been cutting the kids' hair for a while, and I said, you know what? If I screw mine up, it's pretty short. I'm not going to see anybody, number one, and I'll just shave it. So.
Well, again, number one guard all over.
I'm not there yet, but I'm getting pretty close. So, we talk about the personal finance 101 aspect of things, and teens are actually calling for more personal finance education in high school, which I think this is fantastic. So the Junior Achievement Teens and Economic Opportunity Survey released on Monday asked 1,004 teens aged 13 to 17 about diversity, equity, and inclusion, but also asked them about economic opportunity. And the interesting part of this was that most of them did not understand the basics. And so it's not that they don't understand math, it's just they don't understand how to put it all together. So there are some outreach programs that are putting together some self-studies that are supposed to help teens with the financial education, learning the little things. And I think this is going to be a big thing in bridging the gap. We see a lot of people, they get out of high school, they go to college, they're starting to learn life a little bit. And I think this has always been the case, where I think this has always been an issue. But I think we still need to get better about it on encouraging good behaviors, good spending habits. Richard and I talk about this. What's the number one thing you can do with your children is talk about finances in front of them so they understand them. So they don't just think money grows on trees. Begin looking at how do you save money? How do you help people with money? What it can be used for, and not just things, but, to help people, security. But I think this goes much further and beyond as far as, what can you do to encourage good behaviors? And I'm happy and pleased to know that 61% of the teens surveyed think they need to know more, which I think is really good. Now, something else that I think we need to do is that 45% of Americans don't know how much tax to withhold from their pay. So this is that time of year where you're typically filling out your withholdings. So you need to understand your W-4 so you can understand your withholding closer, much, make it more of a reality. And especially if life has changed. You don't want to give the government a big loan. And so understand that if you get a big refund, you're paying too much. Now, some people may like that because it forces some type of savings, but we also know come tax time, we see lots of sales, and that's for a reason, because everybody's getting their tax refund checks. And most people aren't saving them. Now, 4 in 10 Americans don't know when they last updated their withholding. You should be. So, an end of year tax tip. If you have had a child, if you've gotten married, maybe you've been divorced, you've had any big life event, this is something you need to do. Make sure you are updating these on a regular basis, at least looking at these annually. So, regular basis would be annual. One of those things, like we mentioned, always look at open enrollment. Don't just assume and keep what you have. You need to be looking at what you have, what the options are. Make sure you're not leaving any benefits on the table. If you're getting a big refund or if you're paying a lot at the end of each year, you need to go adjust your withholdings. And so my goal would be to not have a big refund, but also not have a big check that I have to write at the end of each year. And I think that's the way we need to change our mindset. We've been taught from the materialization of getting this money, being able to go buy things, because it's that savings element that a lot of people have a difficult time doing, that getting that refund check is great. Well, guess what? If you'd just saved that money all along, now granted, you're not going to put in a savings account and earn a whole lot of interest right now. Like maybe we could have even just a year ago, we could have gotten a little bit of interest. We got we got a little bit duped there where we saw rates creep up for a bit and they drop. But this is still better for you having it in your pocket than relying on them to give it back to you. So keep that in mind. Adjust those withholdings, as we're moving forward. I think this is going to be another good habit that you can create. Now, lots happening with the CARES Act. So the CARES Act, which was enacted, it's the coronavirus relief package, essentially. It is there to help in a couple different ways. So it's set to expire here at the end of the year. And one of the bigger things that we want to be cautious of is it does allow for a handful of things like distributions from your 401k or your IRA without the penalty if you're under 59 and a half. And this is something that you can take advantage of. If your family, if you've been impacted physically from coronavirus or financially, been out of work, stoppage, reduced hours, there's a number of things. You go to the IRS website, they'll give you they've actually gotten a lot better at giving some good information on this. You have the ability to go in and tap these resources. And so if you think this next year could be a difficult year as well, because I don't think this all ends right here just because we get to a calendar date, you may want to go ahead and start thinking about utilizing resources you have at hand. Now, I would say this needs to be the last place you would go. Unfortunately, it's kind of like a Pringles can of chips. Once you pop, you can't stop. And so usually what will happen is that somebody will take from it, and all of a sudden you feel like, it's not as big of a deal. I've already taken some. I need this extra item, or I need this thing. And so it just creates that effect where you can actually go in and do that. So lots of things with the CARES Act that we're going to be talking about throughout this next couple of weeks to prepare you for the end of year. So that's going to be one of them. You may want to go ahead and take some distributions if you feel like you need to. There's going to be the unemployment numbers. Extra unemployment assistance looks like that's coming off the table. That is in the bill that they're debating and going back and forth on right now. So some of these may go away. Some may be extended. We're yet to know. We'll talk about this tomorrow, next week. You guys have a great day. Thanks for tuning in to the Real Investment Show today. Go to realinvestmentadvice.com. Sign up for Lance Roberts' newsletter. Lots of good, timely information. Kind of gives you an inside look as far as what we think, what we do as well. Thank you for joining us. Have a great rest of your week. We'll see you guys tomorrow.
Get daily investment news you can use, delivered at the speed of the internet. Sign up for the Real Investment Report now at realinvestmentadvice.com.
It's a rich man's world.